It is week 40 of EconoChat Let's Talk Business with Mr. Daniel Steinman, and today we talk about crude oil revision, but also how it affects us on a daily basis. And like we said earlier when we started this conversation, that the oil has been falling for the couple of days, Mr. Daniel Steinman.
For the past 3 weeks.
For the past 3 weeks, I can say, yeah. Okay, so just to ask you, what does this mean for the economy? How does this affect the economy? Because we're not sure how long it's going to last.
Also, to give a sensible view of where I think we're going to go, we need to take a medium-term outlook. And by that I mean we need to consider, remember there are 5 months left of this year.
Yeah.
So we need to consider where will we be by the end of the year. In the first part of today's conversation, I said in December last year, we were looking at a Brent price of $68. And that went up to $127 in March.
Yeah.
And that was an 87, almost 90% increase. Massive.
Yeah, massive.
And you remember, I still made the point, especially in Namibia, where everything is carted, you cannot expect that not to have an inflationary effect.
Yeah,
If it gets 90% more expensive to truck your stuff around, you must at least accept that half of that is going to show up in the cost of living. In other words, in inflation. And this is what's been happening.
Yeah.
We talk about inflation of 5.8, then 6, then 6.8%. So these look like relatively small increments in inflation, but they're actually very big. They're very substantial. You must remember, it's every month. So it's 7% on 7% on 7% on 7%, and it's not very long. It's a couple of months, then you are at 30 or 40 or 50%, you see? So, and this is what we've been seeing very aggressively since February.
Yeah.
Now I look at what happened in 2008. Another history lesson.
Yeah.
And the oil price was in the region of about 78 to 82 US dollars, and I'm talking about Brent. And then for some reason, and I think it was a production reason, so there was a shortage of oil, like in 1978. But that's before you were born, Elsa. And the oil price went up and up and up and up, and where did it went to 146 US dollars per barrel.
What?
Brent, yes, in 2009. And what happened? We got the worldwide recession. The financial markets basically broke down, and we had very big civil unrest, not only in Africa, in South America, in the Far East, everywhere. Like what's now been happening in Ceylon for the past couple of weeks.
Yeah.
Civil unrest because the cost of living became a crisis. And if you read our papers in Namibia, you will see it's mentioned every day. Cost of living is becoming a crisis. Now you guys are asking me, where are we headed? And I'm sure you don't want to just hear doom and gloom, which fortunately I can tell you I don't see that. And that's the reason why I cite what happened in 2008 and the beginning of 2009 at $146 per barrel. Because you can see immediately from the figures that the high that we reached in March this year was 127. So it was significantly lower than the high that we had previously in 2009. And then what is so interesting, it took the oil markets about 18 months to normalize. And then they came down, also, I almost want to say unexpectedly. And I still remember end of 2009, 2010, I was watching the oil market every day. And it would come down $3 or $4, and then it would shoot up $5 or $6, and you sort of despair. No, there we go again, the inflation is going to stick with us. And then eventually, and you see these graphs, they are never smooth. They're always up and down. They're sort of volatile. But the end result was that by about 2012, we were at an oil price of about $60 on average. Never 60 on the dot, but on average. And I think it's the same thing that's going to happen here. Is that what I said in the middle part of our conversation is true. The oil producers, the big majors, they need a certain price, which is $80. That is a known, and anybody can go make that calculation. Where's their break-even line? Where's their profit line? The problem with the market is it's a futures market, so it's speculative.
Okay.
So it always overshoots to the top, and then when it comes down, it overshoots to the bottom.
Yeah.
Like for instance, in February this year, one single afternoon, very briefly, WTI traded for minus 13 US dollar. That was only a few hours. Now, up to now, people are speculating: was it a market glitch, a trading glitch, or was it real?
I think it was a trading glitch.
I have to point out there's no agreement on that,
Okay.
because the prices has been hovering at $15, $16, $17 a barrel.
But you come down to that price, Mr. Steinman.
It was everybody's eyes was just so big, So it was really weird. But what I'm expecting is that we are going to go below 80 in about 2 months from now, and that we would probably be somewhere between 75 and 80 by the end of the year. I don't think we're going to undershoot too much. We're not going to go to 60. I don't think so, because of a range of factors. And then what I expect for 2023 is that the Brent price will settle in the region of about 84, 85, 86 US dollar per barrel. And you can compare that to where we are now, 92. Remember, it's already 28% less than the high point. So what we will see is price of oil coming down and then stabilizing, and inflation coming down in the wake of that, and then also stabilizing. But it's not going to happen in the next 2 weeks. It'll take 5, 6, 7, maybe 8 months. So we're looking at the early part of next year, maybe to have something left at the end of the month to go to the movies again.
And on that good note, hopefully so, Mr. Daniel Steinman, we have come to the end of our conversation for today, and it was crude oil revision that we have done. Thank you once again, Mr. Daniel Steinman, for schooling us on the economy, and also for our listeners to really understand, what the oil or how the oil has an impact on our daily lives. Whether you have a motor or whether you don't have one, it does affect you on a daily basis. And with that said, listeners, we will be back next week again. From me, Elsa Bitumyani, I say goodbye to you.